Which asset class do you think is, yielding the highest profit for you guys today?
Today,
Yeah.
all right. So if you're asking today, it's 1,000% retail.
Yeah.
Shopping centers.
Why am I making everybody else rich? Why am I not doing this? At one point, I was just like, are these guys like so much better than me? Are they smarter than me? Are they faster than me? Are they like, what separates me from them? Why
100%.
Why can't I do that?
Retail, you're coming in, it's cash flowing. It's cash flowing from day one. We're yielding roughly around anywhere from like 16 to 18% return per year on our shopping center.
Hey guys, Salman back here with the We Talk podcast. Partner at We Lend, head of originations. I have two good friends who turn to borrowers here with us as well, Mark Martov and Russell Nova. Guys,
What's going on?
Thank you so much for joining.
I'm humbled just to be in the, amongst greatness over here. I don't even know how I got the invite. Somebody else canceled?
Mark, we've been doing a lot together.
Tons, man, and we're doing more.
Yes.
Thank God.
Russ, we just started together, so
thanks. You're welcome.
Thank you, Mark.
Mark gave me a little nudge.
Yeah. But I mean, listen, we've known each other for many years before we even started this transaction or got you guys funded.
Oh yeah.
So how did your real estate journey start?
Well, I mean, I've always been in the financing business. I started back in 2012. That's when we originally opened up with Cornerstone Capital.
Nice.
So since 2012, we've been doing financing, and we could obviously arrange financing, not on the bridge route. I know you guys do bridge, but we have ability to do all kinds of, conventional Fannie, Freddie, life companies, CMBS.
Nice.
So we're privy to all of that. We understand that. We understand how to underwrite. I mean, all of these intricacies, which are very important when you do real estate, right? You could ask Mark. There's deals that are simple, and there's deals that you need to really think outside the box and make
Hold
sure
on a second. There's deals that are simple?
Never in New York City real estate.
By the way, but no. I will say there are deals that are simple. Just it never happens with me. I always hear these amazing stories with other people. It was a beautiful transaction. We found a great deal. Yeah.
When I say simple, I mean, let's say like an owner-occupied deal, right? Let's
Yeah.
say, for example,
I
a
got
doctor
you.
wants
I
to
know what
buy
you mean.
a commercial condo or something like that.
Yeah.
Where essentially you say, okay, I'm a doctor. I make $500,000. He walks into a Chase and Chase Bank just opens up their books and says, here you go.
Here you go.
That's what I call simple.
Yeah.
Right, and then you have your debt yields, and then you have your debt coverage ratios, and then you have all these other stibs that you need to hit.
Yep.
Those are just some of the things that we're privy to, right? So you have the financing side, and ever since then, we're very lucky and fortunate enough to have individuals that trust us and kind of work with us through that. And then about 2025 now, and then about like 8 years ago, we started buying properties as well. We're like, you know what? We're doing so much good for others. It's time for us to do it for ourselves and for the people that trust us and love us.
Can I just rephrase that one piece? Like, I love what he just said, right? Where he was doing it for other people, right?
Yeah.
You know what the light bulb hit off with me is, why am I making everybody else rich? Why am I not doing this? Right?
Yeah, why am I not doing this for myself? That's always the case.
I have, by the way, great client. By the way, I have like the same clientele since I started in this industry. Thank God, everybody's been loyal to me. I'm amazing friends with everybody still. But at one point, I was just like, are these guys like so much better than me? Are they smarter than me? Are they faster than me? Are they like what separates me from them? Why
100%.
Why can't I do that? And at what point do you wake up and you go like, why can't I be that guy, right? It's like the same guy that's like sitting on the couch eating potato chips at night and like, oh, I can't get fit. And what, bro, get your ass up, start doing it.
Yeah, 100%. But I mean, there's a pro to it as well, right? Because when you just start in the business, you have no idea what you're doing.
Yes.
So you're learning from others,
yes.
right?
Yeah, I'm very thankful for that, by the way.
And especially you being on the brokerage side, and initially when you just started this, you're like, all right, this is how a deal gets structured. This is how the financing works. This is what these guys are doing when they're getting LPs,
Right.
whatever the case is. So it's a great way for you to figure out, you know, how to get the deal done on your own as well. So
Yeah. I mean, look, I definitely saw other people doing it, and then I was just mimicking what they're doing. I'm not that special. I'm sure Russell, same thing. Saw other people, and he was just, well, I could replicate this.
Yeah.
Look, 100%. Like Mark just said, at what point do you say, okay, I can do this as well, right? But in real estate, I think everyone should really, really understand that it comes with patience.
Yeah.
You do not want to rush into any of this. It took me a good 6 to 7, 8 years to really want to jump in. There's a lot of people that say, oh, I want to jump in. But don't forget, when you jump in, there's a lot of risks involved.
Tons,
and
man.
lenders,
Yeah.
for example,
One wrong deal, by the way, bankruptcy.
It's not even that. It's you won't be able to do any more business. I mean, you can try to file for restructure and all this other nonsense that these guys do. But at the end of the day, the rapport.
It's
done.
Yeah, 100%.
It's done. So patience is very, very important in here. Waited, right? Yes, I come from the financing background, and now we're purchasing all kinds of assets, shopping centers, multifamily, and there's a lot of individuals that really trust in us, and we're able to come and bring quality products into the market and work with them, and we're very grateful for that. But it didn't come without any kind of trial and error.
Yeah.
Don't listen to anyone when they say they haven't taken any kind of losses or any kind of backstep. Everyone has to go through that in order to really get to where you want to be.
And the stress that goes with it. By the way, I think Denzel Washington said it best. The fastest way to success is slow and steady.
Yeah, absolutely.
By the way, love you in Training Day. I don't know if Denzel's listening to this.
He definitely is. He definitely is. He's calling us right now.
He wants all on his podcast. I remember one of our deals that we were doing in the Bronx. This is like 2013 or 14, where we lost like $70,000 or $80,000 on that one deal because
you guys were lending in 2013.
No. We were fixing and flipping properties.
Oh,
so when we just started in the industry, we started as wholesalers and fixing flippers.
You see what's good? You transitioned, right?
Yeah,
like you started with one,
Yeah.
and then you realized, okay, this is cool.
Which, by the way,
look at it.
These are one of my clients that I was watching these guys do, right?
Yes.
And I saw, right? And like all we see is like from my standpoint, I was looking at you, Ruben. They bought this for whatever, $1 million. They just flipped this for like 1.9. I'm like, yeah, they probably spent $400,000 in renovation. So I'm like, all I'm seeing is like, yo, these guys really just made fucking $500,000.
Those are the good days. That's before there was so much competition out there.
No, but I'm saying like I was watching. This was like that's how
you're right though. 100%.
And I was watching at what point, like, and I'm sure Russell the same thing. He was making all these loans, right?
Yeah.
And at the same time, he was like, yo, I don't think I'm like on the right side of this whole thing.
Yeah, 100%.
No, I mean, like, I knew that, financing was always the thing that I really loved to do, but I was like, okay, hold on, I can do a lot more if I put the right people together. And don't get me wrong, I can't do any of this on my own without having a strong fundamental and a team behind us. We really couldn't be able to do the things that we wanted to do, and even our latest closings, right?
Yeah.
Where we just closed a deal with you. So, by the way, amazing work on your team.
Thank you.
That was good. I like everyone within your organization. Including Brian. I think Brian's an amazing guy.
He's a great asset.
He's quick. He's fast. He's underwriting. But even then, I don't need 100% of everything.
Right.
Right. You take a little bit of everything. You give responsibilities to the individuals that are part of your team, and you move on. And that's essentially how it is.
But Russ, you got to understand that also. Listen, there's a lot of people that are listening to this, and they don't have the teams in place, right? Because they're starting from where you were circa 2012.
Are you ready for my answer?
Go for it.
Don't do it then. Do not do it. Take your time. Read. Educate yourself. Grab a book. Go through the process. If you want to do something small, fine. But, at this point, we're not doing small. And that's just because we're already accustomed to doing something a little bit larger. Yeah. I'm not saying to start something larger. Right. That's not what I'm telling you guys to do.
So my next thing is I'm reaching out to people, right? So to answer on that question, you kind of like walked into my trap of what I wanted to talk about is that these people that want to start out, I'm offering them that they could come in as a partner with me because I have all the systems in place. I have the lender. I have the construction. I have everything under the sun. I have the lawyers. I have the legal team, the title company, the insurances. I even have the fucking tile guy that you guys want.
Boom.
You see the stuff at $1.99 a foot at Home Depot. Guess what? I have the wholesaler that's sending it from China. So if you have a deal and you want to do it, we'll structure a brand new LLC, everything on paper with attorneys, and we'll come in as partners.
Well, that's called a dream team, right? I mean, I mean, you've worked your way to get there. Yeah. Right? So it's not like somebody can just wake up and say, I have all of this. Yeah. You have a product and you're offering something. So with all that experience, I'm 100% sure that somebody who wants to get into real estate should get into real estate with you, for example, learn the business, understand it, follow your lead, and then eventually you understand they're going to go on their own, right? It's the nature of the beast.
Absolutely. Listen, I get phone calls all the time, right? Like you even said, Mark, yo, I got a couple shekels, let me come in with you, right?
For sure.
Absolutely. So I'm thinking to myself, all right, let's do a couple of deals together, and then look, sooner or later, it's natural to happen, right? That like, you're not going to need me because you're going to figure out, oh, Mark's got this, connect with the tile. Mark's got this title company. I could call that title company. I could do all these things. Listen, I have somebody that's in like 4 deals with me. I'm just waiting for the phone call of, hey,
I'm done.
I'm done.
Yeah.
I'm taking the show on the road on my own, which is fine, by the way. It's all natural progression. People grow. And by the way, I literally wish everybody to grow. Like, I'm
Right.
happy when everybody's making money.
Right. Every investor is different, right? I think you understand that. There are people that want to be active investors,
Yeah.
and that's fine.
Right.
Yep.
And there are people that just say, you know what? Let me invest. Let me do my thing because I have a W-2 job or
Yeah.
I have other things going on, but I
Yeah.
want to put my money to work. Obviously, somebody who understands the markets and are generally in the market understands that money needs to work for you.
100%.
With inflation and
Yeah.
everything that's happening in the market, your dollar today is not worth
Yeah.
the same thing what it's going to be tomorrow or after tomorrow
Yeah.
or in a year. So
Which-
it has to go to work.
I'm happy you said that.
100%.
Yeah, man. Look, I have different investors with me. I have one guy who's in the optical business, just an investor. He's like, Mark, I want 20% of my money, which, by the way, we personally guarantee it behind it. And he's just like, I don't care. You make $5 million. I want 20%. By the way, you go on Wall Street, the dream is 10% on your money. I don't
Right.
care which hedge fund you talk to, Steve Cohen, all the big
I mean,
operators.
look, if you look at S&P, you're averaging about 8%.
Yep.
So
Is it
anything over,
8%?
yeah, it's roughly about
I thought it
8%,
was 15%.
8 to 10%.
No, the last couple of years has just been crazy.
Yeah.
But the dream, by the way, on Wall
Average,
Street,
average.
Yeah.
And by the way, the wealthier you get, because I have a Wall Street background, the wealthier you get, right? It's one thing when you're talking about like, oh, I'm investing whatever, 50 grand. It's another thing when people come to you with serious money. Hey, I've got millions to work, and you got to give them 10% return. It's very hard, by the way. I have like, we're talking to family offices that are like, that hopefully, I don't want to say too much, but we're talking to family offices that are looking to invest with us.
Same.
I mean, these guys. I'm like sitting there. I'm like, I don't know if these guys are kidding me or not. They're the same thing. They're like, do you think we can make 10%? And I'm like,
Well, how much money are they looking to deploy?
a couple million.
That's not bad.
It's not
That's
bad.
not bad for you. For you to figure
the
out.
returns of what you're asking for 10% is realistic. It depends on what type of asset. I mean, we're in the same position right now as well.
Yep.
We have a family office that invested, say, upwards of $3 million plus into one of our centers and everything, and all they're asking for is anywhere from like 12 to 15% return.
Same, yeah.
But that is a realistic offer because retail, it depends on what asset it is, right?
Yeah.
That's what, again, it comes with experience. Multifamily, you have to work your way up, right? When it comes to retail, it's cash flow from day one. So you're
Yep.
able to do that, right? So every family office, they could request different things. They
Yep.
could request some sort of, personal guarantee.
Yep.
They could request everything. So understanding who they are is very, very important,
Yeah.
and not just to say yes because you think you're going to be getting some sort of
Yeah.
dollars being invested. I
No.
think that's important as well.
Which asset class do you think is yielding the highest profit for you guys today?
Today,
Yeah.
all right. So if you're asking today, it's 1,000% retail.
Yeah.
Shopping centers. I mean, look, I'm an avid multifamily guy. We own about 2,500 units from Florida and Georgia, which includes student housing.
Nice.
And we're extremely bullish on that. We love student housing. We love multifamily. But it's tougher to operate right now with multifamily. With rates of where they are today,
It's impossible.
it's
I don't even know.
it's impossible.
horrible.
People lose their jobs
Yeah.
on a daily basis. Look at the jobs report. I mean, look at everything that's coming out. You have to then release those. Those units. You have to make sure they qualify, right? Because you have a 3x times on
Yep.
unemployment.
Right.
Retail, you're coming in. It's cash flowing. It's cash flowing from day one. We're yielding roughly around anywhere from like 16 to 18% return per year on our shopping centers.
Wow, that's freaking amazing.
Yeah, and
Whoa.
it's
That's
all across
amazing.
the board, and we.
You're on the wrong side of the business, Mark.
No, you're on his side of the business. He's on his side of the business. And
Yeah,
it
no,
works.
I'm only kidding.
But I mean, that's essentially them today. If you ask me in a couple of years, maybe we'll switch the business plan. But you have to be in the moment.
Right.
And right now, this is the moment.
I mean, you also diversify your portfolio, right? So you have your multifamily, you have your student housing, you have the retail strip center. What else are you guys doing?
Well,
Self-storage, I'm assuming you guys are doing? No?
not yet. I've never dabbled into that.
Yeah.
I know that the margins are
It's
retarded on
crazy.
it,
It's crazy.
By the
It's
way,
I have a couple
retarded
of
on
friends that
that.
are in that.
but I've never dabbled into that because it's another business. You see, like
Yeah.
I would like to educate myself a lot more in that before I go all in on something like this. But I know a couple of guys, like for example, there's a group out of Seattle called Spartan Investments,
Mhm.
and they only do storage. These guys are animals.
By the way, if you want to take it to the next step, so one of my clients that you know actually very well is Carlyle Group, which is a
Yeah.
huge Wall Street operation. They are huge. One of their big things, like literally one of the most successful hedge funds on Wall Street, I think worldwide, Carlyle Group is big in storage. Nobody even knows this, but they're buying up all the little guys everywhere. You know, everybody just hears on the news how they're buying up all the single family homes in the Sun Belts, but they're actually
my only
storage
reservation with that is that they're buying up in tertiary markets, right? And you have to understand there's not many demand drivers. Storage facilities are usually in classy areas, right, where there's not much going on, or there's just a very dense area, right? For example, like NYC.
I think that's where they're focusing.
So if they're focusing in tertiary markets, myself, I've had a few properties that I've gotten out of. You know, we did the business plan, but I don't think I would ever invest again into any kind of tertiary markets for that reason. If markets shift, we went from rates of what, a 3.5%, right? Where the rates were 3.5 to now up to 9%.
It's crazy.
How do you get out?
You can't.
How do you get out?
You can't.
More equity, more money, more everything, more injection.
No.
So that's the issue with that.
Yeah, this is why I like I mean, again, there's no right way of doing this, but this is why I like my business model a little bit more, because I'm protected from these kind of things that could happen. Because, well, Russell's got literally decades, not to give away his age at this point, but decades
young
of experience
great,
on me.
by the way,
33.
Man.
No, thank you. I appreciate that.
No, for sure. I mean, so let me ask you a question. What are your plans with those 2 properties that we just closed on for you? What are you going to be doing there?
Is Flatbush Ave we're talking about?
That's right.
Flatbush
That's
Avenue.
right. We just closed Flatbush Avenue last week. So the plan is very simple. We're gonna renovate those units. I mean, you can't come into those units. I mean, I wouldn't put my worst enemy inside of those units right now. Today. Yeah. Right, so we plan on renovating those units. Really, really, to a point where we can get market rent. Right, it's a fully, market apartments, and we're just gonna hold on to it. There's no reason to sell. We're gonna refi, of course, but we're gonna hold on to that. I think the market
fantastic.
is
Also,
great.
you're right next to Brooklyn College.
We're 2 blocks away from Brooklyn College. I mean, it's a great area, and our cost basis is phenomenal. Yeah. I mean, we bought it for 2.2.
Yeah.
And the market right now, just as is, I could have flipped it for 2.8, but I decided not to. I felt like this is something that I can hold on to and kind of bring the valuations a little bit over $5 million.
Yeah. Let me ask you a question. You guys had LPs in this deal with you?
No, it was just partners.
Nice.
It was just partners. So we don't always do LPs. We don't always do syndications. Syndications are more on the larger deals, and it's a very small amount. It's usually meant for people that we've done business with. Yes, we get it out into the market and everything else like that, but I have to establish a rapport with you, right? I can't just allow you to come in. Like, I have to make sure that you understand real estate. There is a risk when you invest in real estate, like anything else. Either you sign on the line, on the dotted line, or you don't. There's a risk, to invest in any kind of real estate, such as market conditions. The market, what's called tanks. What do you do after that? So you have to know that. But in regards to that, I think it's a great asset, and for that one specifically, it was just a couple of guys that understand real estate.
Nice.
Let's go in and let's go do it.
Nice, that's awesome. So, like, let's say for your student housing or your multifamily, the larger multifamilies down south, you're syndicating those deals?
Yeah.
So once you syndicate, you get those LPs. Once you refi out, what do? You just pay off those LPs and then you ride all that equity, or you still keep them in the deal?
Nope, I keep them in the deal. That's not the way that we operate. We'll refi. Of course, the business plan is always to refi, pull out at least 50 to 70% of your capital. Yeah. Now remember, it's also tax-free as per the IRS code. Right. So anytime that you refi, it is tax-free.
Yeah.
But they're in the deal with us for the long haul. I mean, once you're in with us, you're in with us. We don't operate that way. We want you to reap the benefits of property.
That's great.
Cost segregation. There's so much benefits.
Which, by the way, not a lot of funds actually allow that. So it's
exactly
phenomenal that you do that.
One of the things that we like to do is that we're not a fund, right? So when you invest in some of our properties, such as shopping centers,
syndication. Sorry,
not even. It's a deal by deal basis. Right. So you're investing in that deal.
So same thing with me, right?
Right, but me personally, I wouldn't do a fund. I am not ready for that, and nor will I want to do that.
Yeah, it's by the way, different rules. You're regulated. It's a whole different
There's
thing.
a lot that comes into play. Yeah, the type of people that are able to invest in your fund, the whole 9 yards.
And I'm sure you guys do funds, right? Like for your debt fund or something like that?
Yeah, we have a debt fund. We have a 506c Reg D. It's not easy to deal with.
You have to have an entire team behind you that really just does that. I'd rather not do that. It's a deal-by-deal scenario. So when somebody looks at something, they say, okay, I like this deal. Okay, I'm in. Yeah. Or no, I don't like this deal. I want to go to the next one. Yeah. And I'm sure you do the same thing.
Absolutely, yeah.
It's the best way to do it.
But you don't think it's harder for you to raise a capital on a deal by deal basis rather than having a fund and then just deploying their capital into those deals?
It's a good question. I mean, the answer is very simple. We've built a team around that. So we have investor relations and we have a capital team.
Nice.
So when a deal comes in and I'm all in and we're all in, I mean, we're focusing just on that.
Right.
There's nothing else that we're doing, right? We don't try to do like a jack of all trades or we're doing 5 deals
at the same time.
once.
Right.
We do one at a time, and I think that's the right approach. And Mark will tell you the same exact thing. If you have something going on, focus on that and then move on.
Yeah, no,
I
100%.
never understood these people that are amazing at 5 different, 55 different things. I like this guy. He's good at this.
Yeah.
Sal, this is my guy. We lend. This is my bridge loan guy.
By the way, we got to give kudos to WeLend because I didn't think the experience would be so nice and so cool.
Thank
like,
you.
honestly
I
speaking,
hear that all the time.
No. I swear to God, I thought like we're gonna go through this like whole hunch. I was like, so when I called Mark, I was like, all right, so what do you think? Should I give him a shot? He said, bro, I just closed with them.
This is the only place. Yeah, my words were like, this is the only guy to call.
I appreciate
it. And I
it.
said, you know what it is? Because just like in all our industries, like there's such bad like reputations, like
Yes.
I need to call a hard money lender, and it's just like. You get on the phone with them, and it's like talking to a college professor. Oh, yeah, well, our rates are 12 and 2.
I have those kind of guys that
I
there's
know.
nothing you could do about it.
Yeah,
but those are how they work.
I know. Listen, on a different podcast, I said, listen, I have guys like he's by far not the cheapest, like by far. No offense, but
Oh shit, you guys gonna gang up on
no,
me?
the easiest and smoothest transaction to go there, and your biggest thing is like once you're actually in the project. Listen, you did demolition. You need to start framing. You need to do the electrician needs a payment, plumber. The only thing that stalls real estate projects is money.
Yeah, 100%.
Yeah, this is a game for
You're
big
right.
boys
Yeah.
with very deep pockets. You better have money because
There you go.
Yeah, because if you're not paying the plumber, it stalls everybody else that's behind him. The sheetrock guys can't come in. The installers can't come in. The tile guy can't. I can keep going and going and going and going here. And this, by the way, they have an app. You upload pictures. Money's wired.
Yeah, easy. That's where the team really comes in. Like we were all talking about earlier, right? We have a really nice team that's able to handle the draws, that's able to handle the underwriting, the originations, etc. And that also comes down to you, right? On your side, where your projects are like being complete like less than 12 months, like 7 months, 6 months.
6-7 months, yeah.
It's amazing.
From acquisition to sales. I mean, the sales things I got really
Are
lucky.
you done with the construction already?
Which one? I mean, I have.
Look at this guy's flexing
no.
right now. Which one?
Hold on a
Mark,
second. I
Which
thought we
one?
just said we're gonna do one at a time.
Yeah.
What are we doing here? Are we doing a couple?
My man is doing like 3 projects right now.
Yeah, I mean,
love it.
Boy.
but I mean, listen. Also, thanks to you guys. No, Park Slope's about to be on the market probably by the end of the month.
Nice.
Bergen Street, I'm just waiting on the general attorney for the condo books. That's going to be on the market. And we're starting another project with him right now. But
Baruch Hashem.
yeah, exactly.
Yeah, pretty much.
Yeah, so it's going great. I mean, listen, again, what we're saying again, all back down to the team, which is super important. I think I was on a panel a few weeks ago, and someone was asking me like, what do you think is the most important thing? Funny enough, I was saying team.
Team is very important.
Yeah, when we initially just started, it was Ruben, Moses, myself, and Nissan, the 4 of us.
Yeah, I remember that.
Which was a great team to start, and then we all learned together. I mean, Nissan had the most experience out of all of us. Flipping real estate in Florida, and then we started picking up our things here in New York City. But yeah, all right, guys. So that concludes the podcast for today. Mark, how can people get in touch with you if they want to reach out to you for some advice on how to buy or sell real estate?
I mean, we're posting this on Instagram, right?
Yes, we are.
Markstagram. That's the best way to reach me. You could put my name in Google, man. My telephone number's on like 12 different websites, emails. I'm the easiest guy to reach ever, man. If anybody's looking for me, I'm very easily found.
Russ, how can people reach out to you if they're looking to get into commercial real estate and start, playing with the big boys?
I mean, it's just how Mark said. If you're doing Instagram, just reach out. Russell Nova. It's very, very simple. I've actually taken it off the private, so you could actually reach out to me. So reach out through Instagram, or you could reach out on my cell phone. Email is always best. Russell at csg-ny.com. Russell at csg-ny.com. And other than that, you can reach out and we can chat.
Awesome. Guys, we'll see you guys on the next episode. If you want to reach out to us directly at WeLend LLC or 212-777-7780 or our email info@welendllc.com. Talk to you guys soon.